Mike McKee's been taking a look at the violent market reaction to first the Greece downgrade, then the Portugal downgrade, and now it looks like the Spain downgrade as well.
Of relief. You were talking about the IMF headlines and that calm markets, but then the news about Spain came out. And Barclays actually predicted this today, saying that S&P likes to bunch their downgrades together, and that's what's happened after Portugal, after Greece. We get Spain down to AA from AA+. And it's important to recognize, though, that this is not to junk. They went to junk on Greece, and they came very close on Portugal. So Spain at this point still investment grade, but it's going to pressure the whole European Union area because people are worried about contagion. The big fear, we know they're talking about an aid package. The big fear is, will they get that aid package in time? The key date is by May 19th, when 8.5 billion euros are due for a bond payment. The S&P downgrade also raises Greece's repayment costs. We saw more than 18% on two-year notes earlier this morning, and that raises a question about what happens if they run out of cash early. We saw that with Argentina, and that could lead to chaos.
It's kind of a self-fulfilling prophecy because as the EU and IMF take their time to discuss what to do next, people are selling off Greek bonds, making it more expensive for Greece to borrow.
Investors don't know what's going to happen, so they're buying protection right now. We see it in not just the sovereign CDSs that we've been talking about, but in corporate. People are going into the corporate bond market, corporate CDS market, and buying protection on companies in Europe and in the United States. And the big play for investors has been the spread on Greek bonds, not just to Germany, but we're also seeing Portugal and Germany, and now Spain and Germany widening out. Spain has been much lower than the other two, but we're going to see that no doubt increase with this news coming out of S&P today.
So the spread's blowing up, but of course the counter side to this argument is the rating companies have been behind the ball on a lot of these things. Aren't these downgrades kind of overdue?
Well, they're probably overdue, but they're not hitting at a particularly good time for the markets, because what the question is at the moment is how long does Greece have to get its act together? Analysts will say they need years. They need to work through this, especially to get past public opinion on the painful budget cuts they need to make, but the markets are giving them only days. If they don't get this kind of money out of the IMF very quickly, then we're going to see these spreads continue to widen, make it much harder for Greece to do what it needs to do. The big question is, what do Moody's and to a lesser extent Fitch do? Because if we get another junk downgrade on Greece, then banks can't use Greek bonds as collateral. That freezes a lot of lending in Europe and could cause another credit crisis.
That spurs all kinds of questions and concerns about the solvency of banks as well across Europe, not just in Greece.
Indeed, and it's going to be something that we're going to have to watch very closely over the next few days, and we're going to see markets under pressure probably until the IMF money comes through.